The central bank has decided to maintain its accommodative monetary policy stance with the standing deposit facility rate and the standing lending facility rate at their current levels of 7% and 8% respectively.
Discussion at the Monetary Board, which resulted in the decision to keep the policy rates on hold. There are a number of factors which actually argue for a relaxation or holding of the policy stance. The external environment continues to be favorable. Growth continues to be muted. The output gap also persists. So that again argues for a relaxation of policy.
With the intention of boosting economic growth, the central bank reduced policy rates during several instances in the recent past. However, in line with the reduction in policy rates, the government failed to reach its desired target of economic growth. Local businessmen had faced several issues during the past 4.5 years. Our businesses were negatively affected. Many businesses had to close down. Many businessmen sold their businesses for low prices and left the country. Many successful businessmen were included in the crib. They imposed various taxes on businesses. Ultimately, the tax burden is passed on to the consumer. When the tax burden increases, the purchasing power of the consumer reduces, resulting in the income generated by our businesses to decline. In other words, they made our businesses less competitive compared with foreign businesses. At present, many construction companies have been entered to the crib. I request the government to provide us with the loan facility at a concessionary interest rate, equipped with a grace period of 6 months to revive our companies. Prime Minister and Finance Minister Mahinda Rajapaksa met with top executives of the Sri Lankan banks yesterday to discuss this matter.
We have asked the banks to consider providing a space where customers don't need to pay back their capital for a period of 18 months, but to continue to pay their interest. And the banks will now go back and talk to the central bank also and come back and talk to us.
With the change of government in 2015, vehicle taxes, prices of gas, fuel, kerosene oil were reduced and salaries of state sector employees were increased by 10,000 rupees, resulting in the increase in state expenditure and decline in state revenue. In order to finance the budget deficit, even though the government proposed the imposition of several taxes on casinos, gambling and mansions, a majority of them were not implemented. As a result of the increasing trade deficit, the government faced several issues in meeting their external debt obligation. Finally, the government was left with no option than to seek the support of the International Monetary Fund that came with a package of strict. When the economy was collapsing and when the balance of payment crisis was worsening, the former finance minister in 2016 was pressured to enter into an agreement. Accordingly, they signed an agreement worth $1.4 billion for a period of 3 years. This agreement was due to end in 2019, but the agreement was extended till 2020. The IMF supports any new government that comes into power if the policies of the new government is not detrimental to the country. This was the case in the past. The government is not only compelled to surrender to the conditions when the political leaders use the monetary system to achieve their political objectives. It is only then the IMF intervenes. We can change this. Based on the instructions of the International Monetary Fund, with the aim of increasing state revenue, the previous regime obtained approval for a new Inland Revenue Act. Many experts point out the new Inland Revenue Act has increased the burden of the general public with a complex tax system. Several amendments were approved in the 24 of 2017 Inland Revenue Act by the former UNP government that was pressurized by the IMF. The VAT rate has been reduced from 15 to 8% and the national building tax has been abolished. Following the recent tax concessions, the business community will benefit from this. Investments in the country will increase. People will be able to save more because of less tax. The purchasing power of the general public will also increase. Our prediction is that these measures will increase development in the country. We can clearly state that this will create a positive impact to our country. We thank and appreciate the government's effort to amend the Inland Revenue Act that was introduced by the previous regime and to introduce a new one without bowing down to the IMF.
අපගේ ස්තුතිය සහ ගෞරවය මේ අවස්ථාවේ ප්‍රකාශ කර සිටින්න කැමැති.
Newsfirst continuously pointed out that if we are to formulate a mechanism to develop the economy of our country, we must refrain from following the instructions of the International Monetary Fund. The IMF attempted to incorporate a standard economic development mechanism in Sri Lanka that was used in countries such as Africa and in other regions. Following the instructions of the IMF, many taxes that remained low prior to 2015 were drastically increased. Apart from the value-added tax of 15%, the general public was burdened with an additional nation-building tax of 2%. During the end of the tenure of the previous regime, the general public was additionally burdened with a very high pay-as-you-earn tax. We appreciate the efforts of the new government, whose attempts aim to reduce the burden of the general public by reducing many taxes. However, can the economy of a country be developed by reducing the tax rates alone? Development banks that provided financial support to businessmen and entrepreneurs were privatized following the instructions of the IMF. The time to bring back development banks and revive our businessmen and entrepreneurs has now emerged. It is a fact known by many that a country cannot be developed without increasing export income.